Hey, what's going on, guys? Wanted to shoot a quick video talking about how you could aim to make $1,000 a month from options, right? So typically, I don't like to shoot for specific dollar amounts, but in this illustration, I want to kind of project, if you average these percentages per week, it could get you really close to that goal, right? But by all means, the market is a very challenging place to consistently trade. But however, historically, if you can get close to these goals based upon the certain capital used, I think you can get close to this dollar amount per month. Obviously, not financial advice in this video, just for informational purposes only. But let's just talk about the numbers and look at some of these projections here. So, if you want to make $1,000 per month and you averaged a quarter of a percent per week, so that's going to be roughly a percent a month, after 4 weeks. So to make $1,000 per month, it's going to take us, let's do a calculation here, 0.01 divided by 1,000. Oops, let me see here. So in order to make, so we're gonna have to make $250 per week. So $250 divided by 0.0025, and that gives us an $100,000 portfolio. So if we size a portfolio around $100,000, and you can make a quarter of a percent per week, you can roughly make $1,000 a month from options income. So $100,000. Just clarify this, 0.00, because it's a quarter of a percent. It's 250 times 4. It's going to roughly get you to that $1,000 mark. So quarter of a percent is pretty conservative, right? So looking at just the QQQ, the Nasdaq 100, just selling a put about a week away. Let's look at something for a quarter of a percent. So a quarter of a percent of 462.21. 1% would be roughly $462. So we're looking for something around that 250 level. So 459.00. So 45.9. Looking at that 459 call. Selecting that. You can collect right around $262. So that would get us to our goal. And what would be that return? It's 262 divided by 45. That actually gives us about a 0.5% return. So really we can almost even do 2 contracts at $1.25. So let's look at this one. If you guys can see that, let's see. So 454. It's going for $1.34. So 454 times 2 gives us $90,000. And if we sold 2 of those, so 134 times 2 would give us 268. Okay, so 454 times 2. So 268 divided by 9,800. That's going to give us probably a little bit more. Yeah, so 229. So that would get our goal. That would help us reach our goal, right? And it's an 82% chance of profit. So it's a pretty high probability trade here. You're selling a 20 delta. So do keep in mind, every dollar that moves, this is projected to move $20. The option itself, but according to the delta, this option should expire out of the money. So it should expire above 454, right around 80% of the time. So it says 82%, so there's a little bit of a difference there with the deltas and gammas and stuff like that. But roughly, 80% of the time it should expire worthless. So just keep that in mind. But by all means, the stock market is a very volatile place, and that number can fluctuate a lot. That's just something you have to understand there. So yeah, so that would get our goal, right? So we would sell, you would sell 2 cash secured puts on the Nasdaq 100 at the 454 strike, and that would get us, to roughly $268 per week. You can always close early to get to that $250 goal there. So cool. So that's the first example. So looking at 50% per week. So that's our next target, right? So if you have $100,000, that's I guess what we're illustrating here in this purposes. $100,000 portfolio to designate towards options. Selling cash secured puts is a way to do it. Another way, we'll do another example here. We'll say you bought 100 shares, I guess at 462.21. So 462.21, and we want to make a fifth of a percent on that, right? So 0.005. That means we need to sell our shares for 464.52, roughly. So 464. Yeah, so that's not going to be a problem at all. So we can sell in the money big time. So if you bought it right now, so this is illustrating buying 100 shares. So we can come all the way down here into the money. I don't know if these option prices are a little off because of after hours, but theoretically, we purchase these shares. Let's say we purchase them right now, 462.21. We can actually sell them in the call, in the money call option. All we have to get is the 464.52, which is all the way down here. So we could sell the 455 call. And what would that yield us, right? So if we sold a 455 call, we would be selling our shares away at 464.64. So 464.64 minus 462.21. We would be making roughly $243 on our shares. You'd be collecting a premium. You're selling it in the money, obviously. You're selling it below your basis, but with the count of that premium, you're actually selling it $243 higher than your cost basis. So you're going to make that, almost you're going to make, it's actually much higher than what we were expecting. So 464.64 minus 462.21. You're making $243. So really, this is actually a little bit more aggressive. So technically, if we have $100,000, you only have to make roughly $125 a week. Yeah. So needless to say, these are different ways to calculate how you can, shoot for these goals, right? So, in this example, if we have $100,000 and we're wanting to make $250 a week, it's gonna be pretty easy, right? As I don't want to say it's gonna be pretty easy, but with that amount of capital and that amount of risk, it's very attainable. So in this instance, you can buy two options of. So really, you'd only need to make 462.21. So say plus $1.25. So really, we can sell for 463.46. So you can come down even further, which is just even a higher probability of profit. So 463.46. You can come all the way down here. I don't know, and sell the 450. I mean, that's still 40 cents higher. You're making about $1.60. $1.60 times 2. You're making around $320 a week. Selling a pretty conservative in the money call option. So lots of different options, and that's the cool thing with the stock market. There's all kinds of different strategies out there. So I just showed an example of how much it would take 0.50% per week. So really, you know, that last illustration I talked about, you're making about $1.25 per 100 shares of QQQ, so that's very attainable, especially with this premium being so high. Let's look at another example, maybe like Tesla. If you're obviously, you want to make sure you're very bullish, or you don't mind holding whenever you sell calls and sell puts. You want to make sure that you're comfortable with holding whatever stock it is for a substantial amount of time, because you could buy the stock obviously and it could shoot down. So I like to do a lot of ETFs, but Tesla's a very popular one. Nvidia is going to be a very popular one after this weekend, after it does a 10-to-1 stock split. So it's going to go from $1,200 a share all the way down to $100 and some a share. So this is going to just open up the stock market a lot more for option sellers and stuff like that. Because previously trading options on Nvidia at $1,200 a share just kind of priced a lot of people out. So that'll be interesting to see. Going forwards, it's definitely a stock I'm going to try to trade a lot more of. But coming back to the original purpose of this video, I kind of wanted to illustrate some different examples here. So to make, here's another one. So Tesla's, to buy 100 shares of Tesla, you're looking at, 17.7K. And if you had a $100,000 portfolio, 17.7, you can buy roughly 500, 564, but we'll just round down. So 500, so five lots per se. So let's sell 5 lots. And once again, we're trying to reach, 250 a week. So $52 times 5, that would get us, close to our price target. We're selling a 91%, chance of profit. So this is pretty conservative, pretty far out of the money. So you would sell this 157.5 put. We'll just say Tesla 157.5 put, and then you would sell 5 contracts. 5 contracts, right? So that would get us to roughly our goal, right? 52 times 5, you're making 260 a week. 260 a week times 4, estimate you're above your $1,000 goal. So lots of different options, no pun intended, out there. You can do the combination of a couple contracts at Tesla, a couple contracts at QQQ, and so on. So that's the really cool thing about selling options and knowing this skill set. Disclaimer, I always want to take a couple steps back. Like, I'm not telling you to go definitely do this on this particular stock, or this particular expiration, or this particular strike. Not a financial advisor. I want to make sure you're aware of that. I'm not advising this. I'm just trying to illustrate how much it's going to take to hit this goal. $1,000 a month, I think, is very attainable. But once again, you don't want to be just trying to sell options just to hit that goal every month. Kind of want to reiterate that. So, but yeah, coming back to this, the cool thing about being able to sell options and knowing how to use that skill set, you just have tons of opportunities, right? Like, look at all the expirations. There's tons of stocks that also trade multiple times a week. Like, I know QQQ, IWM, SPY, they all trade 3 times per week. Like June 10th, 11th, 12th, 13th, 14th, 17th, 18th, 20th. Like, there's so many opportunities per week to do this. So if you're looking to allocate the time and have the capital to risk on some of these trades, the opportunities are out there. That is the biggest thing I kind of wanted to get out from this video. Selling options, knowing how to have that skill set in your bag for certain opportunities is great, and it's definitely a powerful skill set to have. Now, but by all means, it might not make sense for your time horizon. If you're just trying to accumulate, you don't want to like cap your upside. You have to understand the risk with that. Selling calls, right? If you're buying for the long term and you're not really wanting to sell your shares at any point, you don't want to get that tax from the capital gains. Then selling calls may not make the most sense, right? You don't want to definitely limit your upside. If QQQ runs to 470 and you sell a 468 call, you're missing out on $60. Really, anything above 469.41, you're capped. Your upside is capped. You do have a little bit of the downside protection, right? Because if you sell the 140 or you sell the 468, you're getting paid $141 regardless if it goes up, down, or whatever. So if it goes down $200, you just kind of hedged your position. Ultimately, I think that's what covered calls are. Can be really good for is hedging positions. But yeah, there's so many different strategies you can implement. This is hopefully just a beginner video to show you the opportunities and the reason to educate yourself more on this topic and selling options in general. There's just a tremendous amount of opportunity, and yeah, hopefully I'm not rambling too much at this point. If you guys are still here, this video is a little bit longer than expected. Hopefully I got the big message across here that selling options and generating $1,000 a month from your portfolio is definitely doable, especially if you have the capital to risk it. If you're only shooting for 0.25% a week, I think this is very, very attainable, right? And the more you go, you're just becoming more and more and more aggressive, right? So what is 0.25% times 52 annualized? It's right, 13%. 13% I think is very, very attainable in the stock market, especially from selling options. As you get a little bit higher, it's just going to be harder to consistently hit those numbers. 26%. It's going to be a little bit harder, right? Not all markets are going to be able to give you that consistently. I don't know what is it with Google Sheets in this formatting. And then obviously 1% is 52% a week, 52% a year, and then 2% is over 100%, right? So 2 times 52 is 104. Yep. So those are just some basic projections and illustrations. Ranging from 13% to 104%, depending on how aggressive you want to be. And then just how consistently you can pick the correct strikes, expirations, tickers, and so on. So once again, that's probably going to be the sum of the video today. I just kind of wanted to illustrate some different ways to achieve this goal. By all means, some months are going to be great months in the stock market. Some months are going to be bad. That's just kind of the inevitable thing with it. It's just being able to stick with it, being able to not be too risky, greedy, and then just continually getting better at that skill set. So long term, you can get closer to achieving your goals on a consistent basis. So once again, sorry for rambling this video. If you guys are still here, please like and subscribe to the video. It helps us out a lot. And stay tuned for more content on options, dividends, the stock market, GME, and tons of more cool topics like that going forward. So appreciate it, guys. Thanks for watching.